Hey everyone, I hope you're doing well. Have you been following the stock market? Because I have, obviously, and to be honest with you, when this war started and oil went over $100 a barrel, and essentially everyone, including me, thought a significant decline was coming, we were at the beginning of a major geopolitical conflict. Energy prices were exploding, and 20% of the world's energy and fertilizer supply had virtually stopped. A big sell-off seemed obvious. Well, everyone was wrong. In the last 6 weeks, the QQQ went up 31%. I want you to sit with that for a minute. At the highs, at the beginning of a war, with oil over 100, with global supply chains disrupted, the market has never done this. Not in any comparable situation in U.S. stock market history. So what happened? One thing. AI data centers. The infrastructure being built right now to support artificial intelligence is unlike anything we've seen in world history. Billions of dollars pouring in. And the supply chain feeding these data centers touches on an enormous number of businesses. Tech and anything AI related names went up close to 40%. Everything else, more or less flat. Even no gain. So to be at 40%, you'd have needed 100% in tech, which is, no one really does that. That brings me to the years of 1996 to 2000. During these years, the Nasdaq went from 1,000 to 5,000, which is a 500% return. Then starting in 2000, over 2 years, it fell from 5,000 to 1,200, a 78% loss. The move we're seeing right now in the stock market is bigger than that move. The difference, and it matters, is back then tech companies were making no money. Today, AI is generating real earnings. That's not nothing. But this is still unprecedented, and the conundrum remains. I have to take enough risk to give you a reasonable return, while also respecting what history tells us about moves like this. Before this war started, valuations were already stretched. Inflation was already a problem. Now we have higher energy prices, disrupted shipping lanes, and the conversation has shifted from rate cuts to potential rate hikes. None of this has gone away. The markets have just decided not to care. Focus on AI for now. Eventually, I probably will care. When we do have meaningful AI exposure, but we're diversified. One area we continue to hold is silver and gold. Increasingly, gold hasn't moved the way it has historically during wartime. That's another anomaly in the market. The market's full of them. But we believe precious metals are building a base and have room to move much higher. You know, our job isn't to chase momentum blindly, and it isn't to sit on the sidelines out of fear. It's to stay disciplined, stay positioned, and keep our eyes open when the markets are doing things they've never done before. As always, if you have any questions, don't hesitate to reach out. Thanks for watching. Have a great day.